And so when we do have those ETFs, it's not only going to enable certain family offices and institutions to be able to buy Bitcoin immediately. It's just like buying a stock. They can settle it with their prime broker. It's no big deal. They have a custodian already. But that's one step. The second step is it's going to force an entire sector of investors that have been ignoring it. It's going to force them to look into it and understand it. And so having that understanding is really the next big step, which makes me tremendously bullish.
The Bitcoin and crypto space is on fire in the final quarter of this year, with Bitcoin seemingly breaking new yearly highs every day. If the last few months are anything to go by, 2024 promises to be a massive year for anyone invested or working in the crypto space. A spot Bitcoin ETF is coming between January 5th and January 10th of 2024, which is expected to bring a wave of new capital into the space. On top of this, 2024 marks the year of the much anticipated Bitcoin halving. According to James Lavish, a macroeconomic expert and hedge fund manager, the entrance of institutional investors into the crypto space is just the beginning. He believes the approval of a spot ETF won't just bring money into Bitcoin, but it will force wealthy and high net worth individuals to really learn and understand what Bitcoin is. And once you truly understand Bitcoin, there's no going back. Make sure to stick around to the end of the video where James breaks down why the rising cost of living and debt crisis the US is facing is also going to fuel Bitcoin's price. Also guys, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It gives the latest expert predictions, any breaking news, and top on-chain analysis all in a nutshell. Click the first link in the description to join over 25,000 others in becoming a better crypto investor right now. Now here's James Lavish with his Bitcoin outlook.
Well, first of all, I do believe, I'm with you. I believe I'm so bearish on the system that I'm bullish on Bitcoin. I'm hugely bullish on Bitcoin. I came to the party much later than most of you. And I also come from that institutional investing world like Mark does. However, and that's part of the issue is that the people who have benefited the most from this system are not apt to look at Bitcoin as something that helps them, because they don't need something else. Warren Buffett doesn't need or want anything else. Neither does Charlie Munger. Neither does Jamie Dimon. Like, they do not want this. Why? Because it is tremendously disruptive. Now, why doesn't somebody like Elizabeth Warren want it? Because she cannot control you with it. It is out of her purview of control, and that's a problem for her. So that goes back to your point of, okay, as this gains traction, and as we see in the next 3 to 6 months, we have multiple Bitcoin spot ETFs approved, which enables many institutional investors, small offices, small family offices, and those who just have not been able to convince their investment committee that holding Bitcoin is something that is not a reputational or a career risk. They have not been able to get to it because of the internal controls on buying, on settling, on custodying, on pricing, on market, on Bitcoin. They just have not been able to get there. And so when we do have those ETFs, it's not only going to enable certain family offices and institutions to be able to buy Bitcoin immediately. It's just like buying a stock. They can settle it with their prime broker. It's no big deal. They have a custodian already. But that's one step. The second step is it's going to force an entire sector of investors that have been ignoring it. It's going to force them to look into it and understand it. And so having that understanding is really the next big step, which makes me tremendously bullish, because there's no arguing that the fundamentals of Bitcoin, it trumps even that digital gold narrative, which will be the first narrative. That's going to be the first narrative. I agree with Michael Saylor on this, that the first use case for most investors is going to be digital gold. Then we move into the we need to control this phase, right? So what are the options? Can they ban it? It can't be banned. I mean, you've seen what happened in China. They I don't know if they pretended to ban it. It's difficult to understand what their policies are with that regime, but China is still one of the biggest Bitcoin miners on the planet, if not the biggest, right? So, and so I think we get into the spot here where people are a little bit worried about, but once we get the ETFs and it's widely owned, they can't ban it. I just can't see them working against BlackRock and Fidelity and, State Street and Texas Teachers and CalPERS. And like, that would be such a monumental move. I can't get there. They could tax it significantly in a way or something, but these ETFs, once they get approved, that's like a stamp of approval that I believe will put this into the mainstream, and that's it. The cat's out of the bag. And then what the number go up technology is interesting, of course, because you're seeing this influx of capital into the space that's tremendous, and that's going to be the digital gold narrative. But as that comes in, you're going to see this expansion on top of that, on the next layers, on transaction layers, on the second and third layer of Bitcoin that enables just a whole new array of technology and companies that are going to capitalize on that. And that's something that's super interesting. This goes beyond the miners. This goes into software solutions and hardware solutions, and and Bitcoin enabling, the Bitcoin layer enabling things that we just can't do right now in a way that is more secure and doesn't need the trust, because it's trustless, that the other cryptocurrencies need, because they're central. They're centralized. Where the decentralized nature of Bitcoin enables a growth in an industry that we would not have seen. We had the internet, we're going to have AI, and we're going to have the Bitcoin industry. And those are the two big developments, I think, that are coming down the pipe. And it's going to be interesting. It's going to be exciting. And that is exactly like you and I were talking about before the show. That's exactly why we started the Bitcoin Opportunity Fund, because we see tremendous opportunity. We're talking to people and we're investing in companies that we're super, super excited about. And so, it's an exciting industry. I think it's just going to develop exponentially from here.
And then there are companies that make a lot of profit now. So again, I just think that there's a lot of nuance here in terms of how this reshuffling ends up happening. Probably hard assets end up doing quite well. Bitcoin, real estate, things like that. Different corners of the stock market will do a better job of preserving wealth than other corners of the stock market. So there'll be a reshuffling there, and then bondholders just get crushed. Is sort of how I see it as in general.
And in general, at the end, I think that's a solid viewpoint. However, let's move back a couple of steps. Number one, the delta for someone who has so quality of life, right? So if you can pay for your food and energy and your housing, okay, then you can survive and you can have a somewhat comfortable quality of life. However, when prices rise so much and you're at the low end of that earnings curve and all asset prices rise, well, that the multiplier effect on those larger things, so anything that's not a necessity, ends up being out of your reach. So your quality of life is likely to diminish. So because you're not going to be able to keep up on that any of the larger purchases. You need a new washing machine, you want that new TV. Not that that's necessary, but maybe that would raise your quality of life, or maybe you want a better bed. That would raise your quality of life. But have you seen the prices of beds? So things like it. I just don't think they're keeping up in that sense. Number one. Number two, when you have these cycles, and this is the problem. This is what maddens me. Is that when you have the manipulation of money and you're going in these cycles, you continuously go in these, ebbs and flows of the economy, and then you get into one of these downturns, well, who gets hurt? Who gets hurt the most in that downturn? Who loses their job, right? You're going to have a little bit of a barbell, but typically, you're having a swath of wage earners that are not critical to a company that get laid off. And so all those layoffs and that recession winds up just doling out economic pain across the board. And so at the end, we've been conditioned now to the Fed and the Treasury coming in and dumping liquidity into the markets. Why? Because they need markets to operate, to function properly. Why? Because they need treasuries, the treasury market, to operate properly. Why? Because they must be able to issue more debt. So we've been conditioned that they're going to make sure that large companies don't fail, that large banks don't fail, that the market doesn't melt down, that the treasury market stays liquid, and they if they have to dump liquidity in there to ensure that, then they will. And who makes off from that? Well, just like you just said, it's the Cantillon effect, right? Or the Cantillon effect, if you're French, where the one who's closest to the spigot, the ones who are closest to that liquidity spigot are the ones who benefit the most. And so asset owners, people who own large houses, who own gold, who own Bitcoin, they're going to benefit in this cycle, in my opinion.
So there's James Lavish with his prediction for Bitcoin and crypto. It's clear that the Bitcoin and cryptocurrency space is not just evolving, but truly revolutionizing the financial landscape. James's perspective on the upcoming Bitcoin halving and the introduction of a spot Bitcoin ETF highlights a pivotal moment for the industry. His analysis underscores the potential for significant inflows of capital and a deeper, more sophisticated understanding of Bitcoin amongst institutional and high net worth investors. Remember, the dynamics in the crypto world are fast changing, and staying informed is key to navigating these shifts successfully. That's why I encourage you to subscribe to my daily 5-minute crypto newsletter. It's packed with the latest expert predictions, all condensed into an easy to digest format. Join over 25,000 others in becoming a more informed crypto investor by clicking the first link in the description. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.